Hey there, Investing Iguanas. Iggy here. And boy, do I have a juicy episode for you today. We're about to embark on a wild ride through the stock market jungle, where billion-dollar takeovers, shady scandals, and game-changing deals lurk around every corner. Brace yourselves as we explore the ins and outs of Ocbc's jaw-dropping $1.4 billion bid for insurance titan Great Eastern. Is this a match made in heaven or a corporate heist in disguise? We'll dive deep into the numbers and unravel the mystery together. But that's not all. We'll also shine a light on the murky waters surrounding Seatrium, where a scandalous past threatens to catch up with the present. And if that wasn't enough to get your heart racing, we'll take a front-row seat to ST Engineering's latest money moves as they aim to reshape the landscape of their industry. Trust me, you won't want to miss a single second of this adrenaline-fueled journey. So buckle up, sharpen your claws, and get ready to sink your teeth into some of the most exciting stock stories of the season. Let's get this party started. All right, Investing Iguanas, let's dive deeper into the juicy drama unfolding between banking giant Ocbc and insurance titan Great Eastern. Here's the deal. Ocbc already owns a whopping 88% of Great Eastern, but now they want the whole pie. They've put a $1.4 billion offer on the table to gobble up the remaining 12% stake and take the insurer private. Sounds like a sweet deal, right? Well, not so fast. The independent financial advisor, after crunching the numbers, says Ocbc's offer of $25 to $60 per share is reasonable but not exactly fair. I mean, sure, it's a tempting 37% premium over Great Eastern's last traded price. But when you compare it to the insurer's true value, it's actually a 30% discount. Smells like Ocbc might be trying to score a bargain here. As you might expect, minority shareholders aren't exactly thrilled about this. They feel like they're getting the short end of the stick. The Securities Investors Association has also stepped into the ring, demanding more transparency from Ocbc and pushing for a better deal for the little guys. It's a classic tug-of-war, folks. On one side, you got the big bad bank trying to optimize its capital and expand its wealth management empire. On the other, you've got the small investors fighting tooth and nail to maximize their returns and get a fair shake. So who will come out on top in this corporate showdown? Will Ocbc sweeten the pot to appease the minority shareholders, or will they play hardball and stick to their guns? Will the independent directors of Great Eastern rally behind the offer, or will they push back and demand more for their investors? It's a saga that's got the market buzzing, and the stakes are high. Great Eastern is a crown jewel in the Southeast Asian insurance world with a storied history and a massive customer base. For Ocbc, bringing the insurer fully into the fold would be a game changer, solidifying its position as a wealth management powerhouse. But as with any high-stakes takeover battle, there are risks and uncertainties aplenty. Will the deal clear regulatory hurdles? How will integrating the two giants play out? And what will it mean for the thousands of employees and millions of policyholders in the Great Eastern family? One thing's for sure, this is a story that's far from over. So grab your popcorn, Investing Iguanas, and stay tuned as this corporate drama unfolds. We'll be here, breaking down the twists and turns and helping you make sense of what it all means for your portfolio. Strap in because it's going to be a wild ride. Meanwhile, a dark cloud is looming over offshore and marine group Seatrium, formerly known as Sembcorp Marine. The company, which recently merged with Keppel Offshore Marine to form a new industry giant, finds itself embroiled in a massive corruption scandal that has rocked Brazil. Dubbed Operation Car Wash, this far-reaching investigation has already ensnared numerous high-profile politicians and businesses in its web. Now, Singapore authorities are turning their attention to Seatrium, probing potential offenses related to this sordid affair. The allegations are serious, with whispers of millions in bribes and backroom deals. It's a stark reminder that even in the gleaming world of corporate boardrooms, the lure of dirty money can lead some astray. Seatrium, for its part, insists it's fully cooperating with the investigation, opening its books and pledging to root out any wrongdoing. But that's cold comfort for jittery shareholders who have watched the company's stock price plummet as the scandal unfolds. The fallout could be significant. Seatrium has already agreed to pay a hefty $182 million settlement to Brazilian authorities, a sum that will surely put a dent in its bottom line. And with the Singapore investigation still ongoing, there's no telling what further penalties or legal consequences may lie ahead. It's a cautionary tale for businesses everywhere that cutting corners and playing fast and loose with ethics can come back to haunt you in a big way. For Seatrium, the road ahead is uncertain, as it works to rebuild trust and emerge from this crisis with its reputation intact. In other news, ST Engineering is on a roll, scoring big ammunition contracts worth over $100 million with new customers in Europe. Their 155mm 4mm ammo is flying off the shelves thanks to top-notch tech and a sterling reputation. Meanwhile, OU Commercial Rate is cashing in on the U.S. real estate market, selling off a major stake in the landmark U.S. Bank Tower in L.A. Sure, they took a bit of a haircut on the price, but hey, in this economy, sometimes you gotta take what you can get. Over in China, Seatrium Rate is proving that retail is not dead, posting a tidy 1.2% bump in rental income. And even though that translates to a slight dip in Sing dollars, they're still sitting pretty with sky-high occupancy rates. Last but not least, Savannah Rate is keeping the industrial game strong, renewing a bunch of leases and locking in tenants like a boss. So what's the big picture here? Well, it just goes to show that even in a topsy-turvy market, there are still plenty of opportunities for savvy investors. Mergers and acquisitions can be a great way to unlock value, but you gotta make sure the price is right. And sure, corporate scandals can spook the market, but the cream always rises to the top. Strong, well-managed companies can weather just about any storm. As for REITs, they can be a solid bet for steady returns, as long as you pick the right ones. The key is to look for top-notch assets, a diverse tenant base, and a management team that knows how to navigate choppy waters. At the end of the day, the secret to investing success is pretty simple. Stay diversified, do your homework, and play the long game. Don't get too caught up in the day-to-day noise and hype. Keep your eye on the fundamentals and remember that slow and steady wins the race. Building serious wealth takes time, discipline, and a willingness to ride out the ups and downs. All right, iguanas, we covered a lot of ground today. Ocbc's bold takeover play, Seatrium's brush with the law, and ST Engineering's big wins. The key takeaway? Stay alert, stay diversified, and always look beyond the headlines. Do your own research, trust your gut, and invest for the long game. If you found this video helpful, give it a big thumbs up and share it with your friends. And if you want more juicy insights and irreverent analysis, smash that subscribe button and join the Investing Iguana family. We'll be here, cutting through the noise and helping you navigate the wild world of finance. Until next time, stay savvy and keep on climbing that wealth tree.